All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for July 20th, 2022. So here's a quiz for you. Suppose you were in this position and you had been stalking this symbol and you had followed it all the way down, saw the gap, bought an SSC with the standard risk, saw the COTA 2, you were patient, saw another COTA 2. The next morning, you bought the breakout with the turbo position, so a large position intraday, sold off the intraday piece, kept 20% for a second swing position. So now these two positions are identical in size. Both of them were paid for by the money you made intraday on the turbo. Then you got lucky and you got that favorable gap, which held. And then over the next 2 days, you got a breakout to the upside. This broke out again. And then today, this thing sold off, got below yesterday's low. So you cashed 1/2 of the swing position. Let's call it last in, first out. So now what you're holding on to is this position. This trade, which had this much risk, returned about 1, 2, 3, 4, about 5R. You gave back about that much on that second position. And now you're holding this position, and it closed today here. So my question is, where do you put your stop for the second half position, or really the first half, the half that you're still holding? If you say 0, that means you would, in retrospect, exit that thing right now, 5 minutes before the close, and you can get out. You can get out of the entire position at the red line or at the red dot. Or you could make a tight stop below yesterday's low and have a stop at 1, or at this gap below the doji at 2, which, by the way, connects to this gap position pretty nicely. So any violation of that line is really a negation of the upward move, and it's saying, yeah, it could be more like this, and have that adverse gap. So that's what 2 represents. 3 is the skin of the dragon. 4 was essentially the high of the day that you bought. 5 is the spine. 6 is the open of that day. So just call it right above there. 6 is the skin of the dragon. That's what I meant to say. 7 is the PSAR. 8 is the original stop of the first position, which would be a -1R on that swing. So right now you're holding about +2R on this first position based on the size of this gap. All right. So that's your quiz, part 1. Part 2 is what you should be noticing right now. And this is the important lesson. What is your routine systematic procedure for making this routine decision. What's your recipe for managing that? And can you make that judgment with price right there 5 minutes before the close? Can you make that judgment and make your decision in 5 minutes, just in case you were deciding to exit here? You will notice that these are daily bars, which explains the gaps. And I was holding overnight risk in all of these, but with overnight risk dimensions. That's buying this thing around 8.25 and 6.25. That was about a 25%, of the price initial risk. It would have to be an adverse 25%. And so all you're holding on this one is a swing trade position. And if you just use the standard risk, that would be about 955. That would put you down here at 4. This box here to 4 is the same risk as that one. Okay. The gap stat on this one is not large. It's maybe, $1. So you're getting 2 gap stats. So this is, a $2 overnight risk on this thing is 25%. So even if you got a 25% adverse move, which is larger than that, and that's pretty close to $2 actually, if we look at it honestly. There was a $2 adverse gap. Here was about a $2 favorable gap. So you could get a gap from here to there, which is why 4 might be your, risking 1R, which would still give you half an R. Okay. So this is the quiz. I'd like you to think about it. And if you feel like it, part 1 is place your stop. Part 2 is describe your routine systematic procedure. Number 3, a reflection journal. For what did you just learn after you go through 1 and 2? Don't hurry on that. Decide how much time you want to put into that lesson. This is a lesson for the guys in the Creativity 202 course, a bonus lesson. Dan Blum, Marius, I see you out there, Chun Long, Eddie Jackson, he's got some work to do. Okay, so that's the quiz. Hat tip to Phil and Griff, who just sold their first couple slots out of the first 20 to the to their Owl Bundle trading course, the prototype, the initial offering of this thing. It changes your worldview quite a bit. So +1 to those guys for working hard. I gave a presentation to some Army generals today, and they've asked me to come back and talk to them more about this tomorrow on the thing I briefed you on last night, and that is Dr. Borba's 7 essential traits of thrivers. I made the argument to them that when we are trying to develop new ways of thinking in Army officers, that we need to treat them like young children learning new skills and embrace these 7 traits and develop courseware that triggers and improves all of these, and not just issue them new things to learn as if it was same as the old stuff, and punish them with painful learning and rigorous, painful assessments. That we need to really trigger the most powerful force in the universe for learning, which is a young child's mind. That we need to create that kind of mindset in their learning atmosphere in the way that we teach it. And they've asked me to talk to them some more about that, about how we might take first steps in doing that, because they were resonating with those ideas at the Army University Innovation Symposium. So I get paid for doing my job today. This is also my point about learning to trade. If that's a new mindset for you, then these are the things that we really want to be taking a look at. How can we be confident? Why is empathy important? Because part of that is understanding who's on the other side of the trade. What are the market participants feeling like that? How do I read and share those emotions? How can I detect emotional states in others through the evidence that's left on the ground with price? How do I understand that? How can I learn to be compassionate for all of the market participants in order that I may be compassionate to myself? What are my methods for self-control and integrity, and curiosity, creativity? How do I continue to persist? Part of that is trading at a level of risk that allows me to stay in the game for the next 1,000 trades. And what is the basis for having optimism? Faith or evidence, and support from others? How do I keep the pessimism in check? How do I trigger that oxytocin through good social group interaction with the biopsychosocial model of brain development? So those are the things I was working on today with some Army generals that maybe there's hope for them. They were listening pretty well today. That was good. Let's take a look at the market health check. So yesterday was good because we had like a 1, 2, 3 and up it closed well. And then today, after opening about where it closed, it pushed through Z1 and closed better at almost 395. That's a good thing. And the low of the day barely tested yesterday's close. So that I take that as a positive sign. Small range for the day. We have a large range 5-day. The 5-day contains the 10-day range. Today was the 10-day high, and 4 days ago was the 10-day low. So this has been quite a remarkable move. So we might say, hey, I want to lock that in, or lock that in, or lock that in. It's the same recipe that we just saw in the other swing trade. Here's our Kata 2. Notice the RL10 seasonality went to summer today. That's a good sign. Fair value is in sight now at 411. That's not out of range. And there's Z3 and the 30-day high at 416. Remember, the all-time high is up there around 480-ish. So still a ways to go. But that's looking pretty favorable. Cautiously optimistic. It cleared this and that today. Now it's just got to get above that little gap. And it's right on the money, ready to go. And that means that this little gap region, there's no resistance in there, really, until we get up into here. around fair value. So this could be a fast move. Not going to be surprised if that happens. The downside, always easy to see. Low of the day, 2-day low, skin of the dragon, spine of the dragon, which is also the Bollinger Band mean. That's going to be a very strong support. Bottom skin, PSAR, Z-1, which is also the belly of the dragon. Notice the RL30 has rolled up. So we've got an owl entry from right about here. And that's what an owl pattern looks like, which is why it's pretty timely to have Phil and Griff's owl trading course in hand. You know, the first SSC happens over here, and there can still be some early stage gyrations, but by the time you get an owl, it's had enough time to improve that the RL30, which cruised down, has now started to roll up, and that's what makes the owl special inside here. That's your owl in there. Let's take a look at the sectors. First, start with the indexes. So the S&P was up a respectable 0.64. Underperformers, treasuries were up a quarter, diamonds 0.2. Emerging markets were the worst at minus 0.43. They were below that zero line, the cut line between positive and negative. The two speculative US indexes, the Qs, were up 1.6 and the Russell up 1.57. So this is a growth, a US growth posture right now. So that's good to go. Let's take a look at the underperformers. So again, the S&P here, finance 0.37, the first great big stack of defensive plays, lumber, materials, lithium, food, blended commodities, real estate, Aussie dollar, Mexico, from 0.2 to minus 0.4 in that region. Then larger losses in here in oil, staples, Brazil, the VIX, Ethereum, minus 1.87, blended large cap crypto, minus 3.6, and gold, wheat and precious metals, minus 5%. So some trouble in here. And these are much more defensive plays in this region, which means that it should be, we would expect to see growth to do pretty well. The only target we had that was under the S&P today was Alcoa, which was up 0.36. What outperformed? So here's the S&P again at 0.64. Bitcoin, energy, wood, and Simon Property Group up 1.15. Tech and S&P Biotech 1.5. The FANGs and consumer staples 2.2 and 1.6. Marijuana 3%. Oil exploration 2.85. So when energy does well and oil exploration does better, That bodes well on a swing basis for energy. Clean energy, 3.7. Blockchain, Arc Genomics, Arc Innovation, Global Future of Finance, 5.6 and 5% respectively. So a wide range of disruptors and growth. Coinbase and Squarespace, 14 and 8%. Robinhood, 4%. Rivian and PayPal, 3.25%. US Steel, 2.44%. Apple and Microsoft finally got on the right side of the S&P, but underperformed their sector. So that's not as good. Yeah, underperformed both S&P tech and US tech, although they got on the right side of the law right there. So quite a range of things to choose from. Let's look at our metals. There's Cliff, US Steel. Those were both better than Alcoa, so that would be the place to look for more follow through. And then Devon and Tesla. Tesla closing at a respectable 742, up 0.8 today. So that's pretty healthy. Range status still 48. So $4.80 is his R10 in Tesla, which, as you can see, is right there. All right, let's go to the daily report. We'll start with the trade of the day. Today was the S&P. One more, because it's the market condition right now that's driving the potential optimism, right? So here is the, that's the open. PSAR flip, standard risk box, standard exit. 1, 2, 3, so about +3. This was the COTA 2 standard risk box. Basically a scratch. This rollover became this was the PSAR flip. I didn't take the first one. I waited till we got I want you to notice the this RL10. We got this little downward fail. That little signal is that. So instead of taking the first, I take the second signal. It's now rolled over a certain distance. Standard risk box. Runs down. A 1, 2, 3 exit would have been here. I waited too long to the skin of the dragon, gave back 2/3, so that's not a very good exit. But it was a bear market, so, you know. Then this thing rolled over fast again. Now notice we get that same quickly collapsing RL10 again. That's why this is a strong re-entry. Standard risk. About a 1, 2, 3 exit. So I get paid a little bit on both of those. I looked at this one as a potential, but the rest of the market was looking pretty strong. And I had span of control. So I didn't go short here. I didn't go long there. I didn't go short here, but now I noticed this COTA 2 and everything was closing well. So gave it one more shot for half an hour. So pretty good day in the market. That's a pretty positive, you know, you see buying pressure in 2 waves early. The sell-off pressure doesn't come all the way back, and then it closes relatively strong near the high of the day on a relatively small risk, or a small range, I should say. That's a pretty good day in a bear normal. That's part of what an upward healing market ought to look like. So feeling my way through this, just like everybody else. Bear normal, strong short term, slowly improving long term. Risk on is still indicated by the risk Z. It hasn't gotten outrageous yet. It's still below 1, although getting close to 1. Still a warning in the U.S. indexes for potential dead cat bounce. Diamonds, Goldman, American Express. That's some strength in XLF right there. So we should keep our eyes on that. In the Dow, we're seeing some more warnings about overheated dead cat bounces. So we'll take that under advisement. No other swing patterns except for, Merck offered a channeling and an overreaction. 7 dojis on the small range today. IBM at 4-1. Johnson & Johnson 2.6. Pfizer and Travelers still showing some remarkable reward to risk ratio, while the rest of the finance sector is doing better. So that may be a value play. Let me come back and hit. There were some starting to see some more breakouts to the upside on the 10-day and 1-month breakouts. So I like paying attention to these because these are the ones that are making the turns earlier and making their moves. So that's like, Disney, Apple, Boeing. There's some strength in there. And I just, quietly all by himself, Walmart down here in the in the staples. Excuse me. ETF tactical. Warnings on overheatedness. Brazil and gold in the auto framer. Gold continuing to break down. That's a story about the upside right there, I would say. Interestingly, utilities are starting to crumble. That's the shift out of a defensive posture into a growth posture, like tech, oil exploration, and clean energy. Those are all speculative ones. So you see the defensive plays starting to lose, and you're starting to see broad-based recovery to new 10-day highs. So that's not just a phenomenon in the US, that's a global phenomenon. Just a handful of auto framers. I'm liking Pfizer and Brazil. And I got to go look at Travelers. I think there's something in there, 6-1. I'll be ready on that one tomorrow. Note to self. Lots of squeezes today because of the small daily range. That's not surprising. There's Tesla and diamonds. That tells you what you need to know. Both the most important company in the world and the big, broad, conservative Dow. Even the S&P is fairly close to the top of the stack for a squeeze breakout like that. Looking at the snipers, the slowly improving market means we get fewer Godzillas in the S&P and in the tactical set. That's wheat and precious. And today was a big losing day, and it made a new 10-day low. Interesting. Handful of fireworks, plenty of fence sitters, and some large upward moves like MTB and Verizon are worth looking for possible breakouts here. And MTB is already deep into a 5-day breakout and a great big 1-day break. We just have to divert for a minute and go see what that's all about, with your permission. This is the argument in favor of the TC 2000 bundle, by the way. Just saying. If you're in the sound of my voice and you have not taken the foundations course and you don't have the TC 2000 bundle, I'll give you the foundations course if you buy the bundle for the month of July. I think it's important to get the tools, and that's the best thing I can do to help you. MTB. Let's see what we got here. That's the advantage of listening in on this thing, by the way. You get when I get in a certain mood. So this is what we have in MTB. This is it's already into a large 5-day range breakout. That's the blue box, is that 5-day range. That's huge. And today was a big 1-day range. That thing is live and ready to go. It's in a wild trading cycle. And look at the size of today's range. It was half of the 5-day range. That's going to be an amazing intraday mover tomorrow while the bulls and bears sort out just what exactly is going on. Yeah, look at that thing. Huge. This is an argument for that Z3 pinch breakout and the emerging dragon right here with kata 2s and then collapsing dragons. And now look at the size of this little tiny wrist box here. You know, that's about $1. And so a breakout to the 5-day high is about 4-1. That would not be irrational. Could it make that move fast? It sure can. Already has. And if it breaks down here, here's the first test. That's a 3-1. So that breakout for M&T Bank Corp, there's something hot going on today. And there will be some carryover tomorrow. That's what I think. That might be a nice option straddle. Oh, I just talked to Danny too. And again, if you're in the sound of my voice, he's offering a unpublished $1,000 coupon off the options course if you contact us in July. And you got to be listening into the podcast to know that that's a deal. Got to reward the due diligence out there. $1,000 off that. So that's what a fence sitter that is volatile looks like, MTB. Pfizer is a fence sitter that has a abnormally absent volatility, both on a 5-day and a 1-day. So let's go take a look at what a fence sitter looks like when it's absolutely quiet. Yep, exactly. Just exactly what you would expect. So now the strategy on this one is that, look, it's got very well-defined upward bounds in here and lower bounds down in here. Let's just call that. And then your breakout box is this from today's range. And you get 1, 2, almost 3 to the 10-day high. And then 1, 2, 3 down to the belly of the dragon. So a breakout in either direction on that tightly compressed 5-day and 1-day range. That's a nice straddle and a surprising breakout. And it is, I mean, it went to this high and pulled back 50% and is sitting right in the middle, waiting for traders to start pushing it around. And neither of those moves would be surprising. The one you want to see is the breakdown, because the PSAR has already flipped and it's sitting right above the 5-day low. So it doesn't take much to tip that over and then momentum come down and take it down to 48 quick, fast, and in a hurry. Oh, just like it did here. Just like it did here. From these exact price levels, big vote down. And this is already like a COTA 2 to the downside. If Pfizer starts failing tomorrow and you're not on it, then you should have a reason why. So note to self, MTB and Pfizer for tomorrow. So those two trade frames come out of this sniper strategy that looks for a fence sitter that is either already very volatile or, where was he? Yeah. Extremely not volatile. That's how you do it. Next, the S&P 500 most quiets based on the 5-day Z-scores, and the most volatile based on the 5-day Z-scores. There's our buddy Citibank, abnormally quiet on the 1-day. That's it's licking his wounds and consolidating. Want to know what that one looks like? I do. Oh, is this any good? Holy smokes. Really strong consolidated base. Really strong resistance. If this failed from here, are you allowed to be surprised if it rolls all the way back to 46? Are you allowed to be surprised at that? That's a genuine question. No, you're not allowed to. That's the answer, because it just did. If this breaks out from here, guess who's going to be surprised? All the guys that are trying to get short on this, that had all this time down here to push it lower and they couldn't. And then that thing came roaring back, pause. So if this thing breaks above the dragon and the RL10, up it goes to here. So 59 is in target. So based on that analysis, a tiny little wrist box like this supports 4 to the upside, 4 to the downside. How many days a week do you want to see symbols in that condition? And the answer is all of them. I want to see symbols like that all the time. Oh, here I go. I can just find that here. The most volatile on the 5-day and with an abnormally quiet 1-day. Wow, that means the 5-day range is huge and the 1-day range is tiny. You want to talk about range compression. That means the breakout can easily go there. Let that sink in for a while for you. Guess who else is in that condition? Goldman, a 2 sigma 5-day, and a -1 1-day. Goldman Sachs in the volatile finance sector. And it's at the top of his stack. This is the same pattern we just saw. You're not allowed to be surprised if it just stops right here and does that. Why? Because it just did that. But you're also not allowed to be surprised if this kata 2 continues to go. So that's what makes this such a powerful position. There's a strong argument that this can break north of this. And if it can go, it's going to at least get to here or here, which is 340, which is a $20 move on about a $3 risk, $4 risk. So 5 to 1. And then if this fails, of course, it's going to come back to the middle of the dragon or halfway down the 5-day range, which is also a $20 move. So you got 5 to 1 in either direction on Goldman Sachs. And when that thing starts moving after those well-documented turning points, that thing moves out and you got a small 1-day risk. 2 stars and a check. That's what that is. That's how good that was. You can get so much information if you know where to look. You snipers, you. Here's something you could look for over on this side. When you have extraordinarily quiet 5-day and then a large 1-day, looking for one. Don't really see one. Everything is so quiet. That's the closest to a big one we have. And the idea here would be if these were an extremely quiet 5-day range, and then the last day was a large move in either direction, you're seeing the first day of the breakout. And then you got the second and third day of follow through momentum ready to work in your favor. Verizon is striking me as one of those quiet on the 5-day and then a 1-day large breakout. Let's just go look at Verizon so you get a sense of what that is. Yes, indeed. I can't even make this stuff up. So this is what you got in Verizon. The previous 5 days, that range was really small. And today's breakdown, when that breaks down, look what you got intraday. Oh, should have been smarter on that. And Verizon, that's not the first day Verizon's been on our screen. That's the problem with an abundance of targets. That's actually the nice thing about having more targets than you can even take. You don't have to settle. There's always good ones. Let's see what that looks like intraday. And oh gosh, I knew it was going to be painful to see. Sure enough. Yep, every one of those tight compressions, you won't lose money on that trade. And when these things break, collapsing dragon, notice what happens after this support level, which had held for 4 times. When that fails, you get an immediate collapse. And now the whole rest of the day was horrible on a day when the rest of the market was positive. So any break below 49 on Verizon is instant pile on to the downside. Any breakout to the upside from here feels like it could be an SSC. That this was an overreaction, and now all the buy on dip opportunity guys are going to come in. That's a harder sell in the bear market, but that's not impossible. This is the place where you would expect support to hold. So here's what you do. You put a nice tight intraday risk box like the R10. Hey, what's the R10 in Verizon? Oh, I know, 13 cents. It tells you. And it can move $1.26 on a range stat. So if it just, let's say it just opened here and went $1.26, that would be 50 and a quarter. So it could move right back to here easily. And it could also sell off to 47.75. It could make this move. That's the range stat move in either direction tomorrow. If it moves that far, you're not allowed to be surprised. You're only allowed to be surprised if it moves farther than that. That's how good Verizon's going to be. How fast does it make those moves at the turning points? Pretty darn fast. Pretty darn fast in either direction. That one, Verizon's in play for tomorrow. So enough of how to go fishing. That's how you go fishing. So as you start thinking your way through these things and starting, that's what empathy looks like, by the way, from that list of the qualities, mental qualities of kids that thrive, of learning to feel the emotions associated with these calibrated numbers. So things that we want to look at for tomorrow: MTB, Pfizer, Verizon, for sure. Citibank. Wow. So good. And Goldman. So something to work on for tomorrow. Sniper stats from the Auto Framer. These are our tactical symbol set, sorted by 5-day volatility. Look at marijuana. Holy smokes. 2.17 in a big move today. And this is what the power of TC2000 alerts. Wait till you see that one in the sniper trade. Man, was that any good? Multi-time frame NDX. Real weakness in here. Merck, Procter, and Coke. Johnson & Johnson, not much better. So healthcare starting to suffer. There's the suffering in healthcare. So the sector has to do what the components are doing. Components are getting murdered. The sector is underperforming compared to all the other things that are doing well. So that's another turning point in the market. Healthcare was a flight to quality while everything else was getting smoked. Utilities were benefiting, but now it looks like finance and tech are back on the rise. That's a pretty good 5-day run. It cleared the higher high. Now let's see if it has legs. If it doesn't and it fails, it's back down here fast. Remember, bear normal. So that's not a guarantee of anything. I mean, here's what happened the last time it did that. It sold off for 3 or 4 days. So that is still baked into the cake. Don't let your endorphins get the best of you. You know, the slopes of the shorter term regression lines are doing pretty well. And the 90 is just starting to turn. That's why this could be a really interesting moment, is that when you get the turning point in the RL90, that means all these other ones are going to continue to go up and then pull the 90 up with them. And that's where you get these long ocean trends. Like that whole move from here, from +1 to -3 sigma, that's this move that went from 480 to 370. That's minus 110 points on 480. That's a 25% sell off. That's how bad that RL90 slope got. But now this is what 6 o'clock position on the clock face, this thing could be rolling back up. That's fairly healthy. Maybe we just get a little bump like that. We'll take it. That gets you back to here, which is 410 or 420. We don't mind that. That's a 30-point move. That's 9%. Not predicting or forecasting or even believing. I just know it's possible. All right, let's do some sniper trades of the day. You saw this one already. This was the S&P. It's kind of worth seeing it again, though. Gap up, PSAR flip, standard risk, gets paid very well. Kata 2, micro gain, take the second short signal, get paid. Kata 2 continuation, get paid. Get back to the zero state, take a Kata 2 into the afternoon and take the little piece. This is Clean Energy, Pbw. Very liquid. Gap up, wrist box off the bottom, breaks above the OR3. Gave back 2/3. I probably gave back too much. Locked in an R, but I gave back 2. So not so good. But it's +1. I forgive myself. The RL10 is reversing. So I'll take the Kata 2, the official Kata 2. You can feel it, can't you? There it is. Held on better than I thought. Good exit. Short. Took a while for that to develop. I waited for the, that first move was so good that, I could technically get short here on the PSAR flip, but that was so good. I wanted to see that collapse in the RL10. So I just waited for that one. Standard risk, paid off pretty quick. I should be getting ready to get out of this. Better be. Standard exit, Kata 2. Half an hour loss. There wasn't much volume and it was starting to stall. So, we got what was there. Couple pretty good trades now. Pbw Clean Energy. This one is, this is marijuana. Strong close yesterday, big gap up, wrist box off the low. PSAR exit for, that's your R10 right there. The R10 value that's in the spreadsheet. So that's about 1, 2, 3. By this time, I felt like, oh man, I missed the short. So we'll take the SSC with a very low risk because that's the standard risk box. And my execution is going to be here anyway. So I'm only risking that little piece of it. And then if this fails, I'm going to be short because then I think it's going to come back all the way to here. But if it works, it's got to get above this RL10 to be interesting. So I'm really only risking a little piece. Something like that. Scratch. And missed that one big time. But it was late in the day. Not in my plan to be able to do that in that symbol. US Steel, big gap up. Now this one kind of caught me by surprise. I was lucky to get out of this with my skin. This closed on me like a steel trap, if I can say it that way. Breakout from the OR3, ran all the way up here, and I'm gloating, and then it collapsed so fast I could just barely get out of it in time, and was shaken, so I didn't get the stop and reverse, and I missed this whole move. So just that's what shock and awe feels like when you're on the receiving end of it. When you think you know how your favorite symbol is going to trade, there's a certain complacency that's not healthy. Look how much of that I missed from being not prepared. Holy smokes. Now I'm prepared for an SSC. Happy to get out of that one with 1R. This thing was becoming pretty volatile. Caught a 2 continuation, quick loss. Missed the short. God dang it. That one hurts so bad. This is my favorite symbol, and I'm hosing it up. Can't do anything right on this one. Caught a 2, so just get back to normal. Standard risk, and that's my execution risk. So this whole box is the standard risk. That's where I would execute, because there's still room to get back down to here if it fails out of there, right? And then it gets interesting if it gets above here to a new high of the day. So this is just the tactical trading space. Quick loss. Try it again, same trade. Second one fixes the first one. And again, just lucky to get out of this one with my skin today. Missed the Kata 2 all over the place. So I called this one a draw. Was happy to escape. But we got paid about 1 here. Lose a half, gain a half. So this comes out of here with about a half. Yeah, that really was a shock. That means it's going to be volatile again tomorrow. And I like the fact that it was generally up. So I'll be ready to play the upside trade in our metals tomorrow. Alexandria Real Estate, ARE, our old quiet secret weapon, got short at the PSAR flip, quick loss. Stop and reverse with the Kata 2. Second leg up worked. They all look the same leaving the station. So here's minus 1/2. And there's a 1, 2, plus 3. So minus 0.5 and plus 3. There's your second. That could have been a second entry because that RL10 did not diminish. I thought about the short, but that move was so strong, it scared me out. And then that's what you get for being scared. But my trading plan was the upside on this one and on peak. So here's your COTA 2, PSAR flip, standard risk. I don't worry about the ones that get away. I worry about the ones that are on the hook. Quick loss, missed the short again. This is an SSC, micro scratch. Just happy to get out of it. So we had the one good trade, which paid for the other 3. So netted about 2 on that one. Peak, PEAK, that's the other healthcare real estate. PSAR flip, standard entry. It had 2 legs up just like the other. I'm sorry, I forgot to put my, whoops. What should I missed my exit? Forgot to put the button on there. Sorry. COTA 2, scratch. Did not take the PSAR flip, took the collapsing dragon short though. So this would be the PSAR flip, but this is a collapsing dragon. And now we got that lower high that almost feels like a CD. It's a CD for sure. And it's also a COTA 2 to the downside. So that makes it double plus good. Standard exit. That was a stop and reverse because I was feeling the COTA 2 quality of this thing, and then stuck around too long and took a -1. Missed the SSC, missed the COTA 2. I wasn't happy with being that sloppy. So I was content with capturing this, capturing that, and giving back 1. Felt like it was time to stop. This is Biotech XBI. Gap up, standard risk, +2 in the bank. COTA 2 reentry for +1. PSAR flip and a little bit more on the short side, standard risk. Standard exit, stop and reverse, -1. Stop and reverse again. Now we're short. And notice the symmetry of that thing. Holy smokes. Missed the SSC. Probably would have scratched under normal operating conditions. Took the COTA 2 for about +1. That was a pretty good one. I'm ready for that one again tomorrow because biotech was one of the stronger sectors today, and ARC Genomics was a very strong ETF. So that's what biotech can do for you. That's one of the 30 most liquid symbols in the ETF stack. So, and then finally Tesla. That had almost the same qualities as that U.S. steel trade, where there was a big gap up. It broke out of the OR3. So let's see that again here. So there was your open. There's the high. So that's the opening range 3-minute. Then that second bar takes that out. So I get long here, It runs all the way up here, and I just barely get out of it in time to scratch. And then missed the move back down. Just again, shock and awe. This one and US Steel kind of had me off my game this morning. Both of those that I thought I knew how to trade. And then I was not in the zero state and missed the big short signal on the PSAR flip, and regretted that one in a huge way. I missed all of that downside. So by the time I get my stuff back together, it's just time for a standard PSAR flip with a standard risk box. And that got paid for one, and that felt like all systems normal, back to the usual. That didn't hurt. I get short at the PSAR flip, standard work, take a micro gain, caught a 2 entry, quick loss, PSAR flip short, plus a half. And I think that was it, because Tesla was I was all over the place, and I think netted 1 on that one, somewhere around there, maybe 2. So lots of the ones I normally trade well didn't do so well. I was better on the newer symbols, where I was paying more attention and strictly executing proper procedures. A little bit of hubris today. Let's check the team. Whoops. All right, here's Luke. 5-minute Aussie. There's a little Kata 2 formation that rolls over, crosses the PSAR, gets it short, gets paid, takes the Kata 2 continuation, quick rollover, quick loss. He was out of the market, missed what would have been a normal Kata 2, gets the Kata 2 here and escapes with his skin, gets short at the usual collapsing dragon. Could have been short here, but takes the CD here. I like that. 2R for the day. That's pretty decent. Woj, 3-minute Aussie. Yeah, this stop and reverse was missed. That was the big pay. We did a little better on this one and on this one. That would have been probably the difference between losing and winning today. Again, we keep finding good times to be out of the market. Darn it. Look at your mental state inside here. We should have gotten more out of this than micro losses and a scratch. So we should be doing a little better in here. That's pretty good right there. Yeah, Devon Energy. We shouldn't, when we're that far in the money, we shouldn't be taking losses here. And then I think that seeing the one got away made you slow to get back in. And then we hung around too long. We could already be short here, and then we get paid on this. Finally got untracked here. Now, we gave most of it back here, so when it resumes, we can get long again here instead of here, but I understand that you wanted a little more confirmation. But that confirmation cost you on both ends of the trade. Yeah, we just got to get that one. That's Kata 2 all over the place. That one makes a difference. There's a Kata 2. Oh, I'm sorry, you were out. Sorry. That's a really good re-entry. Let's not let that become a zero, though. Let's try to get paid. This is pawn on the WTI cash. Reasonable effort. When this one breaks, we can be short in here when that Z3 line breaks. So instead of being here, we could be here. Then that becomes not a scratch, but it takes care of that first one. This is a good PSAR flip. I'm not sure why we're getting out here unless this had rolled over. But then, yeah, that's the one you got to get back in. Now you'll get paid, and a re-entry here will get paid. So that is going to take care of this. Reasonable shots. This one, we should be exiting here and getting paid. And then when this rolls over, we could be short here when it breaks through the dragon instead of all the way down here. When we get this far and we're close to resistance, let's not wait that long to turn that into a scratch. Almost the same on this one. This rolled down and rolled all the way back up. I think I'm out of this somewhere around in here, but that's still pretty good. We didn't lose money on it. Then you have a little Kata 2 developing right here, but you were getting close to being out for the day. So this move in here is the one that makes a difference there. Arch with this is a 5-minute Aussie. If we start trading here, there's a potential for a PSAR and then maybe getting paid somewhere in there. I like this. And I think we waited too long to get out here. I think when it crosses because this immediately failed, just get out at the Bollinger Band mean. This one's good. Oh, I'm sorry. This came all the way to here. That's great. The re-entry, yeah, that's pretty good. We gave back a lot on that one. After this surge and it comes back in here, I'd rather see you take that exit there than this one here, to be honest. Because if that doesn't continue to go, that reversal is enough. And then you just get what you're going to get. This is pretty good right here. 1, 2, 3 exit. There's your stop and reverse. That'll get paid. Gary, the bundle and the foundation combo, just send me an email. I'll give you the link to that. In fact, if you just go on the website and there's a link there for the TC 2000 bundle, and then I'll just enroll you in foundations. It's easy. You have a coupon to do that whenever. All right. So, oh yeah, we already saw this with Luke. Sorry. Yeah, this is pawn on the German 40 index. This is their equivalent of their S&P. You're gripping this way too tight. You're not giving it room to breathe. Like this one, we should be getting out here. That's a good reentry. And then we got paid that much. And then this is just, yeah, you're just making sawdust in here. Z3 pinch. And those are grinding it. And then you get mentally tired and then we're not available to take that trade. So just learn from that. Need to take a break and go for a walk. The way too many of these micros in a row. I like the COTA 2 entry. We got paid, and then there's your PSAR flip. Oh, PSAR flip. I like the scratch. Z3 pinch, so you're out of the chop, and that's where the Z3 break occurs. Yeah, this is a good point about preparing to enter a second position on another symbol makes you miss the first one. Remember, on the ones that work, it's the first position that is the biggest payoff. So, and the second position quite often is not following through as much as the first one does. So we're missing the more lucrative trade and taking the less probable one. So that I would rather see you have more symbols with one position, if that's the trade-off. So that's clear. That's absolutely a span of control lesson to learn right there. Okay. All right. I think that was everything. Yep. That's everything. All right. Good job tonight. We shall see you tomorrow. Oh, QCOM you wanted to look at, Phil?
Yeah, if you don't mind, it's just something I ran across. Look at it on the daily for you guys that are like, for people like Tucker and a little longer term guys.
Oh, heck
and
yeah.
I want it, but do you see it goes up to $1.90?
Yeah, and plus it's above the 30. It made a 30-day breakout today. So that is actually, when you look at this is your 30-day box here, right?
Yep.
So it broke out of the previous 30-day. This is now well above the two previous humps. So that is negating all of this crap. So this is free and clear. So now all it has to do is get above 163. So that's a $12 gain on about a $6 risk if you're using that full box. So that's 2-1. And then if this breaks, this will get all the way back to here for your next leg up around 175, which is another $12. So you got a 2-1 and a 2-1 stacked, and you'll get momentum on that thing tomorrow. Yeah. That thing's ready.
Yeah, Tech's going. They just announced earnings yesterday. They did really well. Just saying, guys.
Yeah, that was the earnings early. Yeah, the earnings announcement early and really strong follow through and no give back.
Yeah,
that's going to look pretty good tomorrow.
So if you want to,
and so if you look at the 30-minute, hey, that's your 30-minute bars right there, and you can see the time frames. Yeah, that's a clear up.
Yeah.
All right, man.
So put enough on it to pay for your course pay for the bundle. There you go.
Yeah. All right, bro.
Or I'm not telling you what to do. Do your own thing.
Your mileage may vary.
All right. We'll talk to you all later.
Yep. Ciao.
Have a good night.